You can see 31 total closed trades, 55%, a net profit of $34,625 on that one single contract. It- What's going on, everybody? It's Ryan here, CEO and head quant at happytrader.io. I wanted to go over Ethereum futures today. We're going to be looking at year to date for 2024. So, without further ado, we're going to jump right into it. We're going to get to the Ethereum futures over here on the CME. And you can see that these are the CME futures here. We're going to launch the chart. The first thing we're going to do is just kind of look over our long only strategy, and that is our flagship. And then, of course, we're using our indicator, happytrader.io sentiment AI with a Luma trend. All you have to do is set your buy and sell AI and sentiment AI buy and sell signals, and you'll get all of these potential trend reversals plus the downtrend and uptrend signals. Now, warning, this is not super trend. There's going to be a lot of these fake out signals here. If you go to backtest super trend, you'll see that it's much smarter to trade our happy trader signals because they tend to have a better expectancy. We're going to look at a couple different time frames. We're going to kind of dig into Ethereum. There's been a lot going on with Ethereum as far as the spot ETF and all the things that have been talked about. Why not do a video on Ethereum? The first thing we need to do is enable deep back testing. We're not going to get an accurate back test unless we do that. The second thing we need to do is clear everything out from our previous back test. So we have 529. We're going to be doing 2024. So we're going to do 0101 to 529 2024. Then we're going to set our parameters. The next thing we're going to do is head on over to the TradingView margin requirements. We're going to see 62,414 for one Ether. If you wanted to trade nano Ether, you could do $136 overnight just to get your feet dipped in and not have to worry about these huge swings that could just completely crash the market. But you can see that intraday, 10,000, that's great. So if you're a scalper, you could just have a $10,000 account and you would be able to trade just fine as long as you settle with that 10,000 by the end of the day. Otherwise, you're going to be issued a margin call. We're going to do 62414. We're just going to call it 62500, and we're going to set that here 62500 as the initial capital. We're just going to do one single contract. We're not doing any scaling in, any scaling out. As you know, that when you scale in and scale out using Happy Trader, you can do really well. But we're also not going to do any pyramidings. Commissions, we're going to leave those out. We're not going to have a ton of trades on the 45-minute chart. Now that we have everything in, we're just going to double check it all, and we're going to generate our report. And you can see that looks really good. So 55% and not even a halfway through the year yet, right? By contrast, in comparison, the S&P 500 does 7 to 10, maybe 11% per year. All we're doing is buying the AI on our happy trader uptrend and then selling and closing on that downtrend. To have that kind of performance in under a half of a year is really impressive. Let's dig into this a little bit though. It's not just about the percent performance. It's about getting into how did we get there? Was it too risky? What was the win rate? What did the trades look like? We're going to get into that real quick. Percent profitable falling right in line with the happy trader conventions. We're only winning 1 out of 3 trades, but look at our average trade expectancy over 1,000 US dollars, right? It's almost 1% of that margin. Now that margin is very high. If you do have a broker where instead of 60,000, you're able to trade with 30,000, this number is going to double and you're going to have a lot more percent gains. And the same likely holds true with the nano ether, where you don't need that huge overnight margin requirement. Of course, the trade-off is that you're going to see less gains. Now, max drawdown, this is pretty cool. To me, it looks like Ethereum could run a little bit further because we're only seeing a 39% drawdown. And then we see our 31 total trades. We have our win rate, like we talked about, kind of right there in line. When this starts to push 40, 45, that's when we get into a little bit of maybe an overheated situation. But it looks like we've come down off of here. And it looks like we've come down off of here and then a slight retest. And we'll see if this continues to go down. The markets aren't looking too pretty today, right? nor is crypto. Everything's kind of selling off after the Memorial Day holiday. 31 total closed trades, 55%, a net profit of $34,625 on that one single contract. Now, the next thing we want to do is go to the list of trades, starting with trade number one. And here, the trades in red are going to be your losing streaks. And then you're going to have your winners, which are going to dramatically outsize these losers. And that's how Happy Trader works. That's kind of the secret sauce of what we do here at Happy Trader. And you can also see that if you're a scalper trader and you're not using some kind of sophisticated automated system, wink, wink, we may or may not be developing, you could see these run ups here. You can take a lot of these as scalps. So even if you're holding them signal to signal, instead of doing that, you can take run ups. And a lot of these losing trades give you more than enough room. This one's essentially a double up of the loss that we ended up taking by holding for too long. You can see here another streak of losers and then blam, a $30,000 winner there. And look at the run up all the way to 45,000. Drawdown was only 1450 on that particular trade. And that's the end of the trade log. So you can see that's how Happy Trader works is you get these big paydays. You'll take a little chip off, and then bam, you'll get one of these. And then you'll have another little streak of losers. These ones aren't so little. These are pretty big losers, but then you got a winner there, huge winner there. We do have some offsetting, and then you can see winner, winner, huge winner. You get the idea. And all you have to do again is go to the average trade expectancy, and you can see what that number is without having to go through all of the trades. That's really going to do it for the Ethereum year-to-date backtest. 55.4% using one single contract. And yes, you can use smaller contracts. You can use the micros. You can use the nanos, whatever you're comfortable with. But at the end of the day, this percentage here is what matters. And you can see that we barely went back under, but you can see the red line. We did go under a little bit, just enough to get a slight margin call. Nothing crazy where we took a huge drawdown. As we went over, the drawdown was really from here to here. We saw about a 40% drawdown, 39% or $43,300. But holding on and staying the course would have resulted in a higher return. So higher risk, higher reward. There's no free lunch on Wall Street. That's really going to do it for today's video. If you're interested in learning more, you can subscribe to the channel. You can hit the thumbs up button. You can get the alerts. You can also go to happytrader.io to learn more about our indicator and why it is the best indicator on TradingView. My name's Ryan, CEO and head quant here at happytrader.io. Hope you all had a great Memorial Day and happy trading. Have a great day.